Hi, this is Mijun from Beer Ceylon University. Let's start the Beer Ceylon news for September 5th. Welcome to Mijun, who still maintains the core principles of United States stock investing. Yesterday, I unintentionally broadcasted twice. Many of you probably noticed something was off while watching yesterday's show. At the end, I mentioned that I would dub and share a United States stock video about Tesla's Master Plan 4 with you all as a preview. But at the end of the broadcast, I completely forgot to include it. These days, since I've been taking medication, I feel a bit out of it. So some of you might have been wondering what I was doing just now. Later, when I went to pick up my kids from school and check the comments, I saw that some people were saying things like that. So I came back home and posted another video. I'll be more careful from now on. I try to appear more professional, but I keep making more mistakes. Alright, then let's get started with today's stock news for Friday, September 5th. Alright. Before we start today's broadcast, I'd like to read a few of the valuable comments you all have left. Some of you have left very important questions, and I've also found a lot of positive comments that really lift my spirits. Let me start by reading a comment left by someone with the username Insion. Yesterday seemed like a very lucky day for me. I had some Google stocks in my account, and as soon as I bought more, there was great news, and it turned out to be a big win. Yesterday, thanks to Miju, my Credo stocks have nearly tripled in just a few months. I bought 60 more shares in another account yesterday morning, and last night the price went over $140. It was a very lucky day. At some point it could go down, but I started buying Google when it was in the $140 range, and I've cut my losses several times. Because of boredom and not having enough funds to buy other stocks, I know this stock will go up someday, but in the end, I decided to buy again recently. It's been 2 years and 9 months since I started investing in stocks. I'm still a beginner too, but I'm doing my best to learn. You must be feeling really good. I also feel a great sense of fulfillment. We read some positive comments together. From Gyeongunvi, thank you for uploading videos despite not feeling well. You said you invest in 18 to 20 stocks using momentum investing, but I don't think I can manage that many stocks while working a regular job. Wizwon Nem's membership is very helpful, but sometimes it's hard to keep up with all the posts. Sometimes I just skim them. I was wondering if it's okay to focus only on ETFs and about 8 to 10 individual stocks. Would momentum investing work? Or if I want to make a profit with momentum investing, do I need to have as many as 18 to 20 individual stocks like Mijunim? Personally, I think having close to 20 is better. But even having around 8 to 10 stocks can give you much better results compared to not diversifying at all. Instead, if you have 8 to 10 stocks, a lot of them will probably be blue chip stocks. In my case, out of 18 to 20 stocks, more than half are blue chip stocks, and no matter what, at least 30% are invested mainly in mid-cap stocks that are a bit riskier. So having only 8 to 10 stocks feels a bit lacking if you want to include some smaller stocks that can maximize your returns. Well, but even so, that's still a pretty good number. Don't worry, I think you can go ahead with momentum investing. Now the next question is very important. This is a comment left by Park Jae-woo. Thank you for today's broadcast. Also, I'm enjoying Mijuchu as well. The thing is, on Mijuchu, Credo is the earnings per share growth rate is expected to be around 40% in 2 years, which is relatively stable. But since the sales growth rate is in the high 20% range, you mentioned that we should be cautious if it drops to the low 20% range. With this first quarter earnings call, is it possible that these forecasts could change? From an investor's perspective, especially for those of us who focus on artificial intelligence beneficiary stocks, this is an issue that we really need to think about seriously at least once. Let me start with the conclusion first. Many artificial intelligence companies have shown growth rates of several 100% over the past 1 or 2 years. Even NVIDIA has gone up by 200%, right? That's why such tremendous growth rates are only possible in the early stages, and of course, that's true. But because of that, there are many people who claim that this tremendous growth rate will soon suddenly drop to around 20% or at most 25%. Personally, I don't agree with that. Let me explain briefly. Naturally, you can't maintain the initial growth rate. However, despite that, I'm one of those who believe that the artificial intelligence revolution has only just begun. For example, from my view, I think the technology most similar to this artificial intelligence revolution is the search market, which is monopolized by Google. So now we're comparing these two technologies. For your information, I wonder if you know how many people use Google search. The world population has just surpassed 8 billion, and out of that, more than 5 billion people use Google search. That's amazing. And Choiji Producer is now the most popular among artificial intelligence apps. The number of people using Choiji Producer is still only about 700 to 800 million, not even reaching 1 billion. This means that for Choiji Producer to match Google's user base, its users must increase by about 7 times. There remains a significant market size difference. That's why we can say that artificial intelligence is still in its early stages. And there's one more reason. The reason I claim that the revolution of artificial intelligence has only just begun is because of this. It's not just about the number of users. How frequently people use it is also a very important metric. Because when it comes to artificial intelligence, the number of users is important, but how often people ask questions to artificial intelligence is what determines how much artificial intelligence capacity is needed. If too many questions come in, more computing power is needed. If that happens, the artificial intelligence beneficiary stocks we invest in are likely to continue seeing a sharp increase in sales. Now, the number of questions Google processes in a day, the number of searches, is said to be about 8.5 billion. That means even though not everyone in the world uses the internet, we can interpret it as each person doing about one search a day. Now then, we need to think about this. Later, when the era of artificial intelligence comes, we need to think for a moment about how many conversations we'll have with artificial intelligence, how many questions we'll ask, and how often we'll ask artificial intelligence for help. In my opinion, compared to the number of searches we do on Google, the conversations we have with artificial intelligence will be more than 10 times greater. That's what I believe. The reason is that, compared to search engines, there are so many more areas where we can utilize artificial intelligence. Well, in my case, I don't use artificial intelligence that much yet, but compared to you all, I think I'm a bit more familiar with artificial intelligence. For example, when I prepare Media One's broadcasts, I use artificial intelligence for dubbing the United States stock videos. I now run a podcast featuring both my wife's and my voices. This also relies heavily on the power of artificial intelligence. As you can see, even in the process of creating content like this, artificial intelligence is doing a lot of work by using computing power. That's not all. I also started a company when I moved to Malaysia this time. I originally had a limited company in the United Kingdom as well. I decided to set up another company in Southeast Asia, mainly to save on taxes. Now, there were two options. One was to set up a company in Singapore, and the other was to establish a company here in Malaysia, where I'm currently staying. And if there were no artificial intelligence, well, to figure out which of these two options is better, this is what I would have to do. I would have had to go into the search bar and read through various documents. But actually, it's really simple. When I asked artificial intelligence, it analyzed everything easily and gave me the conclusion that it would be much more advantageous for me to set up a company in Singapore. And through the conversation, I was also able to obtain very specific additional information. That's not all. This time, when I came to Kuala Lumpur, Malaysia, I had to sign a lease for a house. Now I pay monthly rent, and before signing, I got the contract. But it's hard to tell whether the contract has reasonable terms or if there are some clauses that might be disadvantageous to me. Because I don't really know Malaysian law, and I don't know how rental contracts are usually done here. At my level, it's hard for me to evaluate these things. So I uploaded this attachment to an artificial intelligence and asked about it. Now, this is the contract I received. When it comes to rental agreements in Malaysia, is this contract similar to what usually happens in typical transactions? Or does it have any disadvantages for me? When I asked that, I got a variety of answers. They said this seems a bit more disadvantageous than usual, and that I should ask the owner and try to negotiate it a bit more. When it was time to sign the contract, I brought it up. I said, "This clause seems disadvantageous to me. Please change it like this." I made 2 requests and both were accepted. That shows how much artificial intelligence can do in real life. It's just that I haven't figured out all the specific ways to use it here and there yet. In reality, I believe artificial intelligence is something you can use dozens of times a day as you go about your life. Also, when I was choosing an international school for my kids, I was able to get a lot of information through artificial intelligence, through chatting and conversations. I wanted to mention that as well. That's not all. I've also exchanged a lot of emails recently. Since I moved to a new school, I've had a lot of conversations via email with the admin staff and teachers working there. Even though I can speak English, I still get a bit nervous. Especially when talking to teachers, I want to write better emails, so I asked artificial intelligence for help. I would say, "I'm going to send this kind of reply, or this kind of email. Can you check if I wrote it correctly and help me polish it?" Then it would refine my writing into really great sentences and create a very professional email for me. The reason I'm sharing this experience with you is that, compared to searching, artificial intelligence has a much wider range of uses, and there's a high chance that, in the near future, we'll be having a lot of conversations with artificial intelligence. Right now, I've only explained the conversation content of a simple artificial intelligence chatbot. Later on, the era of robots will come, and then we'll be having a lot of conversations with robots. Imagine there's a robot in front of you that looks just like a real person. Then think about how many conversations we'll have and how much computing power will be needed if these conversations continue. I think this is something we really need to remember. That's why I think so. In the future, many of the growth stocks leading artificial intelligence will see their growth trend collapse rapidly, and they will only be able to grow by about 20%. I completely disagree with this. Let me actually go to the Credo Technology page and show you. The page that's on the screen right now, this is Seeking Alpha's analysis tool, which I value almost as much as my favorite, Choice Stack. If you click on the earnings tab here, you'll see the earnings revisions. What this is a very valuable tool that lets us see how analyst consensus estimates for Credo Technology's performance are changing. If you scroll down, you'll see the 2026 estimates and earnings per share forecasts for 2027 and 2028. But these numbers are constantly changing. Compared to 6 months ago, the earnings forecasts have increased by as much as 75%, 55%, and 141%. Even compared to 3 months ago, they've gone up by 32%, 30%, and 59%. Lastly, even compared to just a month ago, they've increased by 30%, 27%, and 35%. What this means is that right now, the so-called experts on Wall Street are completely lost. These people are also experiencing artificial intelligence for the first time. That's why they put out their forecasts. But as time goes on, they're seeing things accelerate much more than they expected. That's why they have no choice but to keep raising the earnings consensus, not just the earnings guidance. That's how we can interpret it. So this figure is likely to keep going up because the artificial intelligence revolution is much bigger than what we or even market experts had expected. In my personal opinion, it's highly likely that the growth trend of these beneficiary stocks will continue in the future. Here's a detailed summary of yesterday's United States stock market. First, let's take a look at the S&P 500 map. It's filled with a very pleasant color, though you can spot some red here and there. Most of the S&P 500 stocks showed an upward trend, making it a very pleasant day. Especially, most of the megatech companies also went up. One stock stands out. Right now, Amazon's stock price is up 4.29%, showing the best increase. Although Amazon is not the top pick in the United States. But I think it's good to briefly look at what happened. There's some news related to Amazon, but since it's written in English, let's use the power of artificial intelligence. If you right-click, there's an option to translate to Korean. See, it translates right away. That's the power of artificial intelligence. Amazon's stock price rose more than 3% in Thursday trading as its relationship with artificial intelligence startup Anthropic helped drive the building of data centers and the future increase of Amazon's own Trainium chips. That's how it's being reported. Especially if you look here. This is a cloud service called Amazon Web Services or Amazon Web Services. However, it was reported that Amazon Web Services is building 3 data center campuses with a total capacity of 1.3 gigawatts for Anthropic. There was also positive news that these centers are expected to mainly use Amazon's Trainium chips. This news created a very positive atmosphere around Amazon. That's how it appears. Not only did the S&P 500 do well, but most leading United States stocks also performed. It's the same when you look at the performance of the 11 sectors that make up the S&P 500. Yesterday, you can say that all sectors except utilities recorded gains. So the breadth of the market has probably widened a bit. It surged a bit compared to yesterday. Yesterday, it was 56%, and today it rose to 59.04%. Among the 500 major companies that make up the S&P 500, now almost 60% have their stock prices above the 51-day moving average, so there are a lot of stocks in an upward trend. You can see that the percentage has improved. And the stocks with good long-term trends are also maintaining a very healthy state at 63.8%. Next is the fear index, and the fear index is also very good. It fell to 5.3, but with the 201-day average at 191, a big gap remains. As I often say, if this fear index stays stable below the 201-day moving average, it benefits the United States stock market. That's the perspective to take. The fear and greed index remains neutral at 52, the same as yesterday. The other indicators are very positive, but you may wonder why only the fear and greed index has dropped to neutral. If you scroll down, you can check it out. They're all green right now, but if you go all the way to the bottom, there's only one showing fear. The part I'm talking about is junk bonds, demand. This is a comparison of junk bond and investment-grade bond interest rates. We call this the yield spread, right? Now, the yield spread has suddenly surged. What this means is that junk bonds have lost popularity. The reason why the drop in popularity of junk bonds is a problem is because it suggests a higher possibility of economic downturn. If people expected the economy to keep improving in the near future, there would be no need for junk bond yields to rise like this. So, if there's little difference in yields between junk bonds and high-quality bonds, that means the economy is expected to do well. But if the yield gap between junk bonds and high-quality bonds widens, that means there's a higher chance the economy will do poorly, so the riskier junk bonds have lost popularity. And when junk bonds lose popularity, it means their prices have dropped. Their yields can surge. That's how you should see it. But this part isn't something to be too worried about, because we already know that the economy is slowing down, and when the economy slows down, we have something we can rely on. That's the Federal Reserve. Because the Federal Reserve is likely to step in and cut interest rates at any time. Even if the demand for junk bonds suddenly drops, that means the yield has suddenly surged. So my personal judgment is that it won't be a big problem. Especially yesterday, the results of the American Association of Individual Investors survey, which we can check once a week, were announced. This is also good news for us. As you can see, compared to a week ago, the proportion of investors with a bullish or positive outlook has actually decreased. It's only 32.7%. If that's the case, since the historical average is 37.5%, the number of people expecting the stock market to rise is significantly lower than the historical average. And if you look at the negative figures, historically, about 31% of investors participating in the stock market usually have a negative outlook. But this week's figure is as high as 43.4%. So compared to the historical average, currently, among those participating in the stock market, more people think the stock market will be lower after 6 months. There are far more people who expect this. What that means is, there are still many people who have sold some of their stocks and are holding cash. So, when there are a lot of people holding cash like this, it means there are many people who will buy if the stock market drops, and who will buy more if the market plunges. Therefore, unless the United States stock market faces a major negative event, we can interpret positively that there is a very high possibility the upward trend will continue. Next, let's take a look at the performance of Mijun's top picks. Mijun's top picks were excellent again yesterday. As you can see, except for 3 stocks, all the stocks showed an upward trend, and the stock that led Mijun's top picks yesterday was Credo Technology. After announcing tremendous earnings, the stock price surged by 74%. And if you look after that, Astara Labs, which sells similar products to Credo Technology, also rose by 6.42%. So yesterday, we could see that artificial intelligence beneficiary stocks generally had a good atmosphere and performed well. Third, Celestica is up 4.47%, and TSMC follows with 1.65%. On the other hand, if you look at the stocks that fell, AMD dropped slightly by 0.21% yesterday. Strategy recently lost momentum, dropping 0.81%. As I mentioned on the broadcast a few days ago, Strategy and B2 have shown the weakest momentum. B2 also dropped 4.5% yesterday, making it the worst United States top pick. I'll wrap it up like this. As you all know, my physical condition hasn't been good this week, but I'm actually in a really good mood. That's because good news keeps coming one after another. Just the other day, Google's stock price surged by more than 9%. With the risk of the company being broken up disappearing, it was a huge piece of good news. And yesterday, Credo Technology maintained an incredible growth rate, and its stock price soared by more than 7%. Now, today there's also some good news about stock prices, and it's about Broadcom. For a while there wasn't much news, so it was a stock that people might have forgotten about. Yesterday, they announced earnings, and the stock is now up as much as 4.58%. So, in today's broadcast, we'll take a detailed look at the earnings results announced by Broadcom. Now, if you look here, you can see the actual results. The consensus was the forecast, but the outcome showed a deficit. They announced sales and net profit that exceeded all market forecasts. That's how you should see it. Below that, there's the guidance, and the guidance is also good, exceeding market expectations. Now let's go down and take a closer look at the details one by one. First, if you look at the third quarter revenue at the very top, it grew 22% from last year, reaching $15.952 billion. Well, a 22% increase isn't an amazing result, but we should keep reading. Generally accepted accounting principles, net income for the third quarter is $4.14 billion. But last year, the net income was negative. I don't know if you remember last year. They moved the intellectual property rights from overseas to the United States. As a result, there was a significant one-time cost. Most of it was taxes, so it's unreasonable to compare it to last year. When there are high one-time costs like this, we should look at the non-generally accepted accounting principles numbers. The non-generally accepted accounting principles net profit was $8.404 billion, which is a 37.3% increase compared to last year. So, while sales increased by 22% when we look at net profit, we can see that the growth rate was actually very strong. Now, third quarter adjustment. Earnings before interest, taxes, depreciation, and amortization earnings were $10.72 billion, making up 67% of sales, which shows a strong sales margin. Next, let's review third quarter generally accepted accounting principles, based earnings per share or earnings per share. They made $0.85, but with last year negative, there was no profit. And if you look at the non-generally accepted accounting principles figures, the earnings per share came in at $1.69, exceeding market expectations. In the third quarter, there was operating cash flow, which we usually just call operating cash flow for short. It made $7.166 billion. Compared to last year, it increased by a whopping 44.4%. And right now, the margin is really good. The operating cash flow margin is 44.9%. This means that if you earn 1 million won after spending all the necessary expenses, you still have 449,000 won left in cash. They're boasting an incredible margin. Now this time, instead of operating cash flow, let's look at the cash flow remaining after deducting capital expenditures. In technical terms, this is what we call free cash flow. This also amounts to $7.24 billion. It increased by 46.6% compared to last year, and it's generating an impressive margin of 44% of sales. As you know, Broadcom consistently pays dividends. This time as well, they announced a very nice dividend of $0.59 per share. Earnings per share is $0.85 under generally accepted accounting principles, with $0.85 net profit and $0.59 paid as dividends. That's impressive. That's the perspective to have. They could pay out more if they choose, especially without one-time expenses. They generated $1.69 in earnings per share, and out of that, they're paying $0.59 as dividends right now. Fourth quarter revenue and guidance are key, with guidance at $17.4 billion. That's a 24% increase compared to the same period last year. This quarter saw a 22% increase, so next quarter's growth rate is expected to be even better. That's positive news. Since the market consensus was also $17 billion, they're confident they can generate about $400 million more than that. Now let's hear an explanation from Hock Tan, the President and Chief Executive Officer of Broadcom. Broadcom, thanks to the continued strength of custom artificial intelligence accelerators, networking, and VMware, boasts that it achieved record high revenue in the third quarter. Third quarter artificial intelligence revenue is crucial because it's tracked separately. The growth rate is 63% over last year. Now this is also very positive news. They're saying that they made $5.2 billion from the artificial intelligence sector. And the reason for that? It's because customers are continuing to invest strongly. It's the same as with NVIDIA. Right now, artificial intelligence investments, there's hardly any sign of them slowing down. That's why artificial intelligence sales growth in the third quarter reached 63% now for the fourth quarter. Artificial intelligence semiconductor sales growth will accelerate to $6.2 billion. This quarter was $5.2 billion, right? So $6.2 billion next quarter means an extra $1 billion is predicted. If that happens, it's expected to record growth for 11 consecutive quarters. Now next is the story of Kirsten Spears, who is the Chief Financial Officer at Broadcom. Sales increased by 22% compared to the same period last year, reaching a record high of nearly $16 billion. Adjusted earnings before interest, taxes, depreciation, and amortization reflected strong operating leverage, increasing by 30% year-over-year to $10.7 billion. This is also very positive. Sales only grew by 22%, but what does it mean that operating leverage was reflected? That means efficiency is increasing, productivity is rising. You can interpret it that way. This led earnings before interest, taxes, depreciation, and amortization profits to jump up to 30%. Well, that's not all. Free cash flow hit a record high of $7 billion, up 47% from the same period last year. They're boasting that they've kept their promise to return excess cash to shareholders, returning $2.8 billion to shareholders through cash dividends in the third quarter. As of the end of this fiscal quarter, the company's cash and cash equivalents stand at $10.718 billion, whereas 3 months ago, at the end of the previous quarter, it was $9.472 billion. That means this company is accumulating more and more cash as time goes on. Therefore, it's highly likely that they'll use this cash for new acquisitions, share buybacks, or increasing dividends in the future. They delivered some very positive news. Next up is the guidance. What is the outlook for Q4 of fiscal year 2025, ending November 2, 2025? Revenue is $17.4 billion. If that's the case, it could increase by 9.1% compared to the previous third quarter. That's positive news. The earnings before interest, taxes, depreciation, and amortization guidance is 67% of the expected revenue, so it's possible to analyze that our excellent margin rate can continue to be maintained. Next is the dividend. The board approved a quarterly cash dividend of $0.529 per share. The dividend is scheduled to be paid on September 30, and it will be given to shareholders of record as of September 22. Let me wrap up with a final word from Mi-Ji-Won. The earnings exceeded market expectations, and the future guidance is also very positive. Achieving record free cash flow, consistently paying dividends, and maintaining shareholder return policies can boost investor confidence. The stock price rises when many new buyers purchase the stock. Also, when current shareholders rarely sell, it supports the stock price going up. But as you can see here, the companies that have been most enthusiastic about shareholder returns in the past were Apple and Broadcom, the two giants. Broadcom has continued to maintain this approach, as you can see. Artificial intelligence related sales jumped 63% year over year in the third quarter, and management says this growth will accelerate further in the fourth quarter. Therefore, we can once again conclude that Broadcom, along with Nvidia, is a key player in the artificial intelligence infrastructure market and one of the biggest beneficiaries. Therefore, my expectation was that in the regular market opening on September 5th today, it is highly likely that it will start with a stable upward trend. However, the stock price doesn't rise as much as technology stocks and only saw a slight increase for the following reasons. Broadcom is the 8th largest company in the world. It's just too big. Therefore, it inevitably moves somewhat sluggishly. And another thing, Broadcom's stock price has already surged more than 100% compared to a year ago, thanks to the artificial intelligence rally. So as it rises more, the rate of increase will slow. That's how to view it. To put it simply, market participants already expect that Broadcom will deliver good results. Expectations were high, but Broadcom exceeded them. This earnings report served more as a confirmation that those expectations were exactly met. You could see it that way. Instead of a wow moment, it was a solid but expected performance. But from what I see from the perspective of Broadcom shareholders, I would say this is a satisfactory and good result. Now let's take a look at the momentum. What is the current momentum of AVGO Broadcom? Out of 26 indicators, only 1 is negative, 10 are neutral, and 15 indicators are pointing to a buy. Currently, the relative strength index is only at 57.97, so there's still plenty of room before it becomes overbought. So you can see that there's still potential for the stock price to keep rising. Now let's take a look at the 1-year stock chart. Now Broadcom's stock chart looks very positive. Let me tell you why. Recently, at the end of August, it successfully completed a short-term correction. As you can see here, it was going through a correction. It went up and got blocked, went up again and got blocked a second time, and here it got blocked once more. So it was blocked once, twice, 3 times. But now it's successfully rebounding from the same point, and that's a really great sign, all right? Recently, after holding the $290 level at the pullback, it started trying to rise again, supported by the 21-day moving average. Even before the earnings announcement, it showed a strong trend. Now, based on the after-hours trading price, there's a very high chance that it will start in an upward trend today, and we can expect the upward momentum to continue for a while. Now, if it performs well in the market today and manages to break through the $317 to $320 range based on the closing price, that means we're talking about this area here. If it finishes by breaking through the all-time high, I'll wrap up by saying that in the short term, we can also expect further gains. The last content prepared for today is the Mijuan podcast. The main guest of today's Mijuan podcast is Celestica. The 3 stocks with the highest price increases yesterday were Kuraedo Technology, Asutera Labs, and Celestica. All benefited from artificial intelligence and artificial intelligence. They are especially related to networking. In the case of Celestica, it's a company that makes network switches. So yesterday, Kuraedo Technology showed tremendous sales growth, and as a result, network-related stocks performed well. That's how you can see it. In today's broadcast, we found a professional article about what kind of company Celestica is and what prospects it has for the future, so we connected this article to the podcast in an interesting way. That's it for today's Milk Stock News on September 5th. I sincerely thank everyone who joined the Mijuan broadcast this week. My voice was hoarse today, so it may have been hard for you to listen. I was concerned it might have been uncomfortable for you. I'll get plenty of rest over the weekend, and I'll make sure to greet you with a better voice next week. I hope you all have an enjoyable and productive weekend and make lots of good memories. Let's all keep going together until the day we can retire through investing in United States stocks. Have a happy day, and thank you. Hello, Mizon family. Today is a national holiday, so it's a long weekend here in Malaysia. I should try to make some time with my kids and enjoy the holiday mood tomorrow or the day after. But since today is Friday, we'll focus on investing and work as hard as we can.
Hello, did you start your day well? Yesterday, it took me 30 minutes to drive home from the mall across from my house, though it's just a 5-minute walk. Han Hyojong. Ha, it's frustrating. I shouldn't make the same mistake again. Today, we'll review an analysis article about a stock with a recently skyrocketing price. It's an article about Celestica. Based on today's material, I'll quickly assess if this upward trend is justified and what could happen next. Yes.
All right, Celestica, with artificial intelligence hardware demand surging, it's getting a lot of market attention. Through this analysis, we'll focus on what drives this company's growth, its financial condition, and what to look for from an investment perspective.
Yes, so first of all, what we're most curious about is the performance. It's really impressive. In this quarter of 2025, sales increased by 29% compared to last year, reaching $2.89 billion, and the adjusted earnings per share, which is earnings per share, wow, it jumped by as much as 50.75%, recording $1.39.
Yes, that's right, especially...
You know the operating margin, right? It reached an all-time high of 7.4%. Since March 2024, the stock price soared 344%, so this performance made it possible, right? That's really amazing.
Yes, you saw it exactly right. The core driving force behind this growth is Hardware, Platform and Solution, which stands for Hardware, Platform and Solution Business Division. This is a high-growth, high-profit area, and its sales grew by a whopping 82% compared to last year. Yes, so its share of total sales was 8% last year, but this year it soared to 43%.
Wow, that's a big change, immediately.
This is really the key to the structural change that's boosting Celestica's profitability. And I think this trend is likely to continue in the future as well. Another important point here is that the adjusted earnings before tax margin for the Hardware, Platform and Solution division is about 8%. This has offset the impact of the relatively less profitable legacy business, and as you mentioned earlier, it's pushed the overall margin up to a record 7.4%. Aha!
So, Hardware, Platform and Solution is a highly profitable business, and as its share grows, the overall company structure is improving, right? One hardware, platform and solution growth driver mentioned is the accelerating shift to 800G networking switches.
Yes, that's correct. Customers who used to use 400G are all switching to 800G, and I heard that in the second quarter, the volume of 800G has already become similar to that of 400G.
Correct. 800G is expected to overtake 400G later this year. Since this is also a more profitable product, it will help increase the return on invested capital, as we mentioned earlier.
Return on invested capital rose from 26.6% a year ago to 35.5% in the second quarter. Celestica also plans to expand production in key regional markets due to rising demand.
Expanding production facilities? How large is the scale?
It's said that this expansion could generate about $3 to $4 billion in additional revenue. Capital expenditures will rise midterm due to facility investments, potentially pressuring margins. But there are hyperscalers like Amazon Web Services and Google Cloud. If these companies keep investing, we can expect many long-term investment opportunities. Looking at the bigger picture, in the end, within this huge trend of artificial intelligence infrastructure investment, it shows Celestica's role is growing more important.
Performance is strong, growth is certain, and future investments look promising, but what about the stock price? That's our real question. Even though it has risen by 344%, analysts still say it's undervalued by about 16 to 17%. The target stock price is $226 according to them. According to the analysis, this result comes from giving a bit of a premium to the expected earnings per share in 2026 and considering a scenario where the current PE ratio or price to earnings ratio is maintained or slightly adjusted. How should we interpret this analysis?
The analyst still maintains a buy recommendation. After that, they hold about $1 billion in liquid assets, meaning significant cash or equivalents, and their net debt to earnings before interest, taxes, depreciation, and amortization ratio is low at about 0.9x. That means they are quite financially stable.
Yes.
But the important thing is, as the analyst pointed out, the stock price has already gone up a lot. So for those who are looking to invest now, the risk is higher than before. So now, if the stock price goes through a correction, a cautious approach is recommended, such as buying in portions at that time. This means you should keep in mind that the current valuation is quite high and that there could be volatility going forward. Artificial intelligence.
It seems like it will be a really important reference for understanding the trends in the infrastructure market.
Yes, lastly, I'd like to ask you a question that's worth thinking about. If you look at it now, Celestica's growth is quite dependent on the HSPS sector and the continued investment from hyperscalers.
Yes, that's right. Those two are the key factors.
If competition becomes much fiercer in the future, or if there is a sudden technological change that we didn't anticipate, or even if the macroeconomy worsens and companies reduce their capital investments, if these kinds of external variables arise, can this current growth trend really continue? I think it would be quite interesting for you to reflect more deeply on how this growth trend might be affected. Our investment journey continues. Thanks for joining us on this fascinating path. Have a wonderful day.
Thank you.